Good morning, you're watching Market Cafe with me Shriyanti Singh and Vinny Motiwala, and over the next 1 hour we'll take you through news and updates from within the country as well as across the globe. Good morning, Vinny.
Good morning, and absolutely interesting day coming in because yesterday, yes, most of the markets were shut, but we do have the US stocks futures, and let's keep an indication on what is happening on that front. Specifically, why we're keeping an eye out on is also because yesterday, by the end of the day, firstly, the markets were very flat in India as well. Nothing exciting that happened, but at the end of the day, we saw it fall. Firstly, it touched a record high level, then it started seeing a fall coming in. Let's look at the US stock futures, what they are doing this morning as well, or what overnight they did was quite flattish when you look at the US stock futures. So, seems like the US markets are going to be opening the first day of the year on a very flat footing even over there. So, let's keep an eye out on that. Futures of Dow Industrial Jones slipped as much as 18 points, while Nasdaq was also obviously near a flat line as well. So yes, nothing exciting in terms of the market opening that we're expecting in the US as well. Nothing that has happened great overnight as well. And as of now, yes, the Asian markets will just start opening up now. Japan is going to be closed as well today. Other than that, we'll have Korean market which is open, Australian market which is open, and China will open shortly as well. So yes, we'll take a roundup of that. But as of now, US stock futures absolutely a flat start for the first day of the year for the US markets, while Indian markets as of now also Nifty implied open is indicating a flattish start for the Indian markets as well. So let's keep an eye out on that, Shriyanti. Nothing exciting as of now, at least from the global front.
Absolutely. So let's also look at indications coming in when it comes to oil prices. And when you look at US crude oil, that closed out 2023 more than 10% lower as bearish sentiment took over due to worries that the market is oversupplied from record production outside OPEC. Now, when you look at the WTI contract, that shed about 0.2%, settled around that $71 a barrel mark. And when you look at the Brent also, that lost around 0.1%, settled around that $77 a barrel mark. Now, US crude and the global benchmark booked the first annual decline since 2020 despite ongoing geopolitical risk in the Middle East due to the devastating war in Gaza. Now, the WTI shed 10.7% for the year. When you look at Brent also, that lost about 10.3%. In fact, OPEC and its allies have promised to cut production by 2.2 million barrels per day in the first quarter of 2024. Traders apparently have little confidence that the bloc's policy will bring the market into balance. So that is definitely something that will be key to watch. Now, when you look at International Energy Agency, they've also indicated that it'll be on expected lines, whatever happens with this. But let's also see how this pans out later in the year as well.
Absolutely, but also let's look at some of the important events that one should watch out for today. Firstly, on the global front, we're watching out for the S&P Global Manufacturing data from the US, PMI data from US and UK, as well as the Eurozone and China as well. On the India front, we'll have some corporate action that will be in the Ease My Trip Planner, Easy Trip Planners, and they are looking and they will be considering fundraise today. All cargo logistics will be considering a bonus share in the ratio of 3:1. The record date is 2nd of Jan, so yes, today is the last day for that as well. Valiant Labs will be, the lock-in period for this will be opening up 3.8% equity share over there. And other important events that one should watch out for is going to be that the Prime Minister Narendra Modi will be inaugurating multiple development project worth more than 19,850 crores, and this is going to be in Tamil Nadu, as well as the Bombay High Court is going to be hearing the plea for awarding the Dharavi project to Adani Group, and some more news flow has come on around that as well because Adani Group has onboarded some of these big names, Hafiz contractor, etc., in terms of this strategy as well. So, but the decision will be coming in from the Bombay High Court in terms of more of an update. So let's keep an eye out on these important events that one should keep on their radar today. China market now actually share a sale plan between China, Evergrande, as well as New Energy Vehicle Group and US-listed NWTN has lapsed. Now, this comes after neither side agreed to extend the long stop date. Evergrande's EV arm said that the subscription agreement by NWTN is no longer valid. So that's the update coming in from China.
And when you look at world's biggest seller of battery electric vehicles and plug-in hybrids, BYD, they've sold a whopping 3 million vehicles in 2023. That's a jump of 62%, a stellar jump coming in, the record numbers, posing a challenge to Tesla's position as the world's top EV seller. Remember, the company's 2023 sales figures nearly equal the combined EV and hybrid sales from the past 5 years.
Okay, and some more update from Asia. Actually, the Taiwanese president has responded to Xi Jinping's China's Xi Jinping in terms of China and Taiwan's reunification comments from yesterday. Taiwan's relation with China must be decided by the will of the people, and peace must be based on dignity, says the president of Taiwan. Now, she also said and added that the most principle on what course to follow in relationship with China was democracy.
Well, with this, we're timed out on this segment, but we'll see you with more news and updates on the other side. Welcome back. Thank you so much for staying tuned in. Well, let's take a look at GST collections. And GST collections for the month of December came in around that 1.64 lakh crore mark. So far, GST collection in this fiscal year stands at 14.97 lakh crores, which is 12% higher than the same period last year. My colleague Sumit Chaturvedi filed this report earlier.
Well, GST collection numbers in December have touched 1.65 lakh crore rupees, registering a jump of 10%. If we talk about April-December number, it's about 15 lakh crore rupees, registering 12% jump over same period last year. December, however, was 2% down than November, which was at 11-month high period. Overall, in maximum months, it was above 1.5 lakh crore and 1.6 lakh crore for 9 months on an average. It shows buoyancy in economy. It shows good growth coming from auto sales numbers and festival demand. If we talk about the beginning of GST, it was at around 1 lakh crore rupees. Then it dipped a bit during COVID period. But then the uptick was visible during maximum numbers of this current financial year. It looks like we'll be able to meet target of 12% growth for the current financial year as far as GST numbers are concerned.
Thank you so much for that, Sumit. That's the update coming in on GST front, but a new record set by the CBDT with over 8.18 crore, I beg your pardon, 8.18 crore ITRs that are filed for the assessment year 2023-2024, marking a 9% increase compared to the previous years. Now, when you look at it, the total number of audit reports and other forms filed during the period is 1.60 crores, reflecting significant growth from the last year's 1.43 crores. Let's go across to my colleague Bhavya Dua, who's joining in with us to give us more details on that. Bhavya.
Right. So in a first, more than 8 crore income tax returns have been filed in the assessment year 23-24. And notably, the total filings for the assessment year 22-23 were recorded at somewhere around 7 crores and 51 lakhs. The Income Tax Department in a Twitter post expressed its gratitude to all the taxpayers and tax professionals for helping cross this 8 crore mark. And on October 31, the department had informed about a record number of over 7.85 crore ITRs were filed, which was 11.7% higher as compared to the total number of ITRs of 6.85 crores for the assessment year 2023 filed till November 7th, 2022, which was the due date for filing such ITRs in the preceding year. The last date for filing income tax returns for the current year was 31st of July 2023, and assessees who wish to file return after the due date could have done so by 31st of December upon payment of a penalty. Now, the total net direct tax collection during 2022-23 has been around 16.63 lakh crore rupees, and out of which 8.08 lakh crore accounts for the income tax collection.
Well, thanks, Bhavya, for that update. Let's also listen into the word coming in from Dinesh Kumar Khara, chairman at SBI. He talks about EVs, renewables, and how they continue to be major focus areas. He also believes that the demand for data centers, battery storage, and EVs is likely to sustain. Listen in.
The renewable continues to be the major focus area, and we continue to see the proposal coming in into this particular subsegment. And similarly, when it comes to EV, battery storage, data centers, And these are the areas where we are seeing good interest from various entrepreneurs. And we expect that we'll get to see a decent demand in this particular segment too. Even for that matter, logistics, warehousing, etc. There is a demand which is seen. I would say that we would like to maintain the gold standard of the asset quality in the bank, and will continue to focus on improving the customer experience, and also invest well in terms of the technology. We would also be exploring the possibilities of adoption of the generative AI, so that we can further improve the productivity of our bank and create value for all the stakeholders. We have invested in terms of technology, and every subsequent year we would like to reap the benefit of our investments into technology. And also that technology helps us in improving our operations too. So this is more of a journey. Year after year is a journey, and it's a journey for improvement.
Let's switch focus to Auto PLI now. The government has extended the Auto PLI scheme by another year. Several amendments have been made to the scheme, under which the scheme will now be applicable for a total of 5 consecutive financial years until financial year 2027 to 28. Disbursement will be initiated from financial year 25. Now, the amendments aim to provide further clarity about the same for auto manufacturers as well. So that's the word coming in when you look at Auto PLI scheme.
That's an auto PLI scheme, but let's talk about the auto sales numbers for the month of December and what they are looking like. So in a bit of a roundup that has come in, what we're seeing coming in, big trend that came in was PV. There was a bit of a moderation in sales. For CVs, that surprise in terms of the numbers, positive commentary came in. Two-wheelers saw a double-digit decline on a month-on-month basis. Tractors, that was a very big miss versus the estimates as well. This is what when we're comparing to ET now. So Escorts, M&M Auto, M&M Tractor, Bajaj Auto as well as Eicher Motor, Royal Enfield. That was something that saw a miss and was a big miss versus the ET now estimates, below the estimates. Eicher Motor VECV as well as Tata Motor CV segment, that managed to hold on, and that was above the estimates of ET now. While in terms of Maruti, Tata Motors PV as well as TVS Motors, that was in line with the estimates as well. Let me just look at what we are saying in terms of the brokerages are saying this morning as well. So CLSA is saying that versus their expectation, the retail dispatches were strong for two-wheelers led by the low base, while passenger vehicle, tractors as well as commercial vehicles, that grew in low single digit for the company as well versus SUV models. That was seeing something very good and good growth that they saw coming in, and OEMs overall, while premium in two-wheeler sales was something that was encouraging as well. Electric two-wheeler vehicles also saw a volume of increase of around 16.7% YOY in the month of December as well. And three-wheeler market, that grew by 49%. So yes, Hero, Bajaj, that gained market share, while Eicher and Honda was something that lost the market share as well. And overall, CV sales, like I mentioned, that's something that saw an increase coming in as well. So yes, all in all, a bit of a subduedness is what we were expecting in the numbers as well, especially a disappointment on the tractors front. PV's front was a slowdown, while two-wheelers was something that was better than what at least the analysts were expecting.
Well, absolutely. So that's about December auto sales, but let's get a little more stock specific. And when you look at Hindustan Copper, that is likely to be in focus on account of them being upbeat as copper prices surge amid higher demand for the industrial metal for usage in EVs. Ashesha, in fact, is standing by with more triggers and factors to watch. Ashesha?
Well, yes, what a solid rally Hindustan Copper has seen. The stock is up nearly 17% in the last 5 days and has risen a whopping 55% in the last 1 month. One of the reasons, of course, is the surge in global copper prices. Copper prices on London Metal Exchange are up nearly 9 to 10% from their October lows. Now, the world is very bullish on the prospects of copper demand going forward. One of the reasons, of course, is electric vehicle-led copper demand. Remember, the intensity of copper in an electric vehicle is 3.5 times that of a normal vehicle, and copper constitutes about 28% of the global electric vehicles constitute 28% of the global copper demand, and hence the world is very bullish on the prospects of copper demand and prices going forward. Street estimates that copper could see about 10 to 20% shortage in the next 8 to 10 years. But INCRED has done some interesting analysis, and they say that the world estimates are incorrect, and that is because the world estimates do not factor in the impact of scrap copper sales going forward. Remember, the scrap copper sales element is also an important element in considering the demand supply dynamics of copper, and that is because 32% of the overall copper consumption comes from scrap, and hence on the basis of this theory, INCRED Security says that copper prices are expected to remain range bound at about $8,500 to $9,000 per ton, and that it is unlikely that copper prices will go above that $10,000 per ton. Let's also talk about the second order impact, the consumers of copper, and that is the wires and cables segment. Remember, copper constitutes about 55 to 60% of the raw material cost of these wires and cables businesses. These companies pass on the impact of copper prices, but with a lag, and hence these sectors and these segments will also be impacted on account of the changes in copper prices. But all in all, INCRED has done interesting analysis, and they say that on account of impact of secondary sales, scrap sales, copper prices are not expected to inch above the $10,000 per ton mark.
Okay, Ashesha, thank you so much for that update that has come in there. But we're going to sip into a short break on that note. And as we sip into the break, do not forget ET Now and ET Now Swadesh, in line with helping Indians rise with India, have partnered with Sundaram Mutual to launch Nivesh Day, a groundbreaking campaign to help viewers build their personal finance portfolios through regular and disciplined investing. Nivesh Day is being celebrated on the 5th of every month, so join ET Now Swadesh and Sundaram Mutual to learn how you can build your financial future with an SIP in mutual funds.
Welcome back. Thank you so much for staying tuned in. Well, let's take a look at Zomato then, and some updates coming in from Zomato. Zomato has increased the platform fees for the food delivery to 4 rupees per order in key markets from 3 rupees earlier. Now, the app had temporarily upped the fee to 9 rupees on New Year's Eve in certain markets. Somit is standing by to give us more details. Somit?
Well, Zomato will remain in focus now after a slew of updates that the company had given on the 31st of December related to ordering. What we are now understanding from our channel checks and media reports is the fact that company has hiked the platform fee on key markets from 3 rupees earlier to now 4 rupees. Now, do remember on 31st of December, they had temporarily hiked the platform fee to nearly 9 rupees for every order. Now, as per analysts, every 1 rupee addition of the platform fee implies an incremental contribution margin of nearly 0.2% in the food delivery business, and when it comes to the food delivery adjusted EBITDA, it adds nearly 15 crore every quarter and rupees 60 crore on an annualized basis, which is nearly 15% of the consolidated adjusted EBITDA of Zomato. So keep an eye out for Zomato in trade, because that could be a positive trigger coming in for Zomato. Now, apart from this, if you remember, recently the company had received a 400 crore show cause notice from the GST department, and the notice was on amounts collected by Zomato as delivery fees. Now, Zomato believes that it is not liable to pay this amount, but if required, if it has to pay this amount going forward, then our brokerages believe that Zomato can do so by increasing the platform fee, and this hike of ₹1 in key markets also reflects the same as per brokerages. Now, current hike could offset nearly 25% of the impact as per CLSA, and CLSA also believes that Zomato might use different approaches to offset this GST liability impact. One approach could be to increase the platform fee by rupees 3.8 for 2 kilometer and to around 10.7 rupees for every 10 kilometer. It can also increase the take rate with the restaurants from 0.9% for 2 kilometer restaurants under the 2 kilometer band to around 2.5% to restaurants that are under the 10 kilometer band, and also it can increase the average order value by around 3.6% for restaurants that are within the 2 kilometer band and to around 10.2% for restaurants that are within the 10 kilometer band. So keep an eye out for Zomato in trade going ahead.
Okay, so Amit, thank you so much for that. Surely keeping an eye out on Zomato today specifically as well after the rates for platform fee increase rates, so improvement in terms of margin contribution. But let's move on, talk about DCB Bank. That one remains in focus as well. And what DCB Bank is saying, they remain quite confident in terms of the business continuity, and this is despite the change in the MD and CEO. But for more updates that have come in on this front, let's go across to my colleague Gaurav, who's standing by to give us details, especially in terms of the note that has come in from Antique on the bank as well.
So yes, DCB is definitely going to be in focus because Antique's brokerage team met with the management of DCB because the MD's tenure is going to end in April 2024, and the DCB Bank's management believes that even after the change in leadership, the trajectory for the growth is likely to remain same. They have already submitted some of the candidates' name to RBI and they are awaiting for their confirmation from the RBI. And going ahead, the team believes that the loan growth is going to stay strong and they could double their loan book in the next 3.5 years from here on. They also believe that the NIMs are going to be in the range of 3.2 to 3.3%. If we talk about the asset quality, they believe that asset quality is likely to remain strong for the bank. And if we also talk about the slippages, we may see some kind of slippages coming on, but moreover, the management is very confident that their credit quality is likely to stay in the confined range of 0.4%. And they also believe that we may see some kind of improvements in the fees, and operating leverage is going to help the ROA to grow further from here on. So on back of this, now Antique has also increased their target price for the stock to 180 rupees. Let's not forget that the stock is trading at 0.8 times the book value of FY25 values, and that is why Antiques believes that after some kind of confirmation from the management and the clarity in the change in management, we may see some kind of upgrade in the bank coming up, and that is why they have increased the target price. We also have to note that yesterday the stock was up almost by 9%. So it will be really interesting to see how the stock reacts today.
It'll definitely be interesting to see how the stock reacts today after the change of guard and the note coming in. But let's also take a look at the futures and options roundup coming in. And for that, we have Ansh joining in. Ansh, what is the roundup that you're looking at?
Right, so starting with Nifty first, Nifty made record high in the previous session by crossing that 21,800 mark. However, in the last half an hour, we saw some strong selling kicking in, taking the Nifty down to around flat levels. Now, if you see the chart, post giving a breakout from the 21,500 mark, Nifty has been in a sideways range and is also closing within its previous session's range. This shows indecision and lack of participation in the market. This lack of participation can also be seen in yesterday's turnover as well, which was almost half of last 3 months average turnover in cash market. So traders still seem to be on holiday while we are working. Let's see what happened in F&O segment. In Nifty futures, open interest dropped by around 1.3%, indicating long unwinding. Whereas in Nifty options, most active call writing was seen at 21,850, indicating some resistance around this level, while most active put writing was seen at 21,700, which shows strong support if Nifty drops to this level. Let's have a quick view on Nifty Bank 2. Post giving a breakout from that 1,500 points range, index seems to be taking support at that breakout level highlighted in the dotted line in the chart. In index futures, open interest dropped by 1.2%, similar to Nifty, indicating long unwinding. Whereas in options, we saw very active call writing at 48,800, indicating resistance around this level. Whereas on downside, we saw very active put writing at 47,800, showing support around this level. Shifting our focus to what FIS did, in longs they covered 1,000 long contracts and they added around 1,600 or 1,700 short contracts. So net to net, we are seeing net addition of around 2,700 contracts on downside, due to which the total long position has dropped from 69.5% to around 68.8%. Now FIS are not able to cross that 70% long in index futures, seems overbought region for them. So in a nutshell, participation seems less. Energy is missing, so can't see any strong negatives in the market. Nifty needs to give a breakout from the 21,800 decisively, though some correction would still be positive, as 21,500 seems very strong support for the market.
Okay, Ansh, thank you so much for that update coming in on the futures options front as well. But let's move on a slower stocks that are expected to react to the quarterly updates. Let's go across to my colleague Sharad, who's here with the list of updates and details coming in on that front.
Well, yes, Q3 updates have started flowing in. First, we are having APL Apollo Tubes, largely weak set of numbers as the quarterly volumes fell almost 11% on a sequential basis. Now, the impact is of course coming in because of channel destocking, as there was an anticipation of correction in the steel prices. Also, they have stated that the new Raipur plant is expected to ramp up, and also the Dubai plant has started its commercial production in the December month. Also, we are having Dhanlakshmi Bank Q3 numbers were largely in line, with deposits going up 11% and advances also going at the same rate on a year-on-year basis, largely in line. South Indian Bank, if you look at it, on the weaker side because of the CASA coming down at roughly 230 basis points, coming in at 33%, while a double-digit growth could be there for the deposits as well as advances ranging between 9 to 11%. JTL Industries, very strong sort of quarterly numbers coming in. It recorded its highest ever quarterly sales volume, with the sales growth coming in almost 76% YOY growth. Now, importantly, the value-added production contribution has also been very strong for the company. Ultratech Cement largely flattish to slight weak numbers coming in, as the India sales volume picked up by 5% on a year-on-year basis, while a sequential growth was just 2%. The grey cement volume overseas also pulled up a 20% growth. Lastly, I'd like to point out Coal India, with the December month, actually the coal production levels did go up by almost 8%.
Okay, Sharad, thank you so much for that update that is coming on that front as well. But some more stocks that we should watch out for also. One is SJVN. Let's keep an eye on that one, because DIPAM and Ministry of Finance, Government of India have agreed to the proposal of the company and the Ministry Power to form 4 joint ventures and the companies for development of hydro renewable projects in India as well as Nepal. So keeping an eye on that. We did have some clarification that came in from BHEL as well in terms of the order from NLC India. Yes, yesterday we spoke to NLC India and they also said that as of now they've just received the order. The final allotment of the order will be done by the end of this month as well. So the company has also said that this is just that they've placed a bid for the order, doesn't mean they've received the order. So let's keep an eye out on that one. Other than that, obviously we are watching out for GR Infra. The company has emerged as a successful bidder and received a letter of intent from REC Power. The project is for transmission systems for evacuation of power, and annual transmission charges are of 42 crores, a smaller one, but let's keep an eye out on that one as well. Other than that, Bharti Airtel also in focus in terms of furthermore acquisition of more stake in one of its subsidiaries, that is we're seeing a Beetle Teltech, so keeping an eye out on that one as well. And obviously South India Bank is one that we should watch out for in terms of overnight updates that came in from Q3, is that total deposits increased by 9.37%, gross advances increased by 10.8% as well, and CASA ratio is at 31.79%. So we're keeping an eye out on that one on the back of its Q3 update as well. So yes, a lot of stocks that we're watching out for, Shreyansi, today in trade as well.
Absolutely. So a lot of stocks that we're watching out for, but there's also a lot more that we're watching out for this year. Will the bulls continue to hold the reins of the Lal Street, or are we in for a year of new risks? Let's hear out views from big voices to understand what's in store for investors this year.
In relative terms, India is better placed. Our macros have never been that good, and India Inc.'s balance sheets are delevered, earnings capacity has come back. So why should we trade at a discount? I continue to be extremely bullish for the next couple of years. There is no reason to be bearish. You should be mindful of what you buy, at what price you buy, and I think you'll have to keep a long-term horizon to. But I think the kind of wealth, Nikunj, that we will make in this cycle is going to be unbelievable.
There's a lot that's going on right with this market. What is going wrong in the market? Always a bull market like this will lead to excesses, will lead to overstretched valuation, will lead to unnecessary confidence, will lead to perhaps sometimes regulatory changes that are important, or regulation changes that are important being pushed aside because the market is doing so well. So we hope those mistakes don't happen. But there's a lot to be thankful and a lot to be looking forward to, be optimistic over the next few years than rather be pessimistic. All my predisposition tells me remain invested, don't get scared by the volatility. And I haven't been for 30 years. I've always remained almost fully invested in Indian markets. So don't get scared by the volatility. The best is yet to come. I think, maybe India can't double in 3 years, maybe double in 4 years' time. But, it's still, the best place for a young Indian to be. Look
looks with the way brilliantly macroeconomically India has been managed. And India being such a fantastic structural story, markets can correct. But I don't think we are going to see 2020 markets or 2021 market levels easily.
Okay, also let's listen into some experts who is coming in on PSU stocks, because we've seen a sharp run-up coming in. Do they believe this is going to continue? What is their thoughts on it? Are they optimistic? Listen in.
Longer term, the way their balance sheets have improved, I think general policy has been quite supportive to creating value in PSUs.
My personal feeling is that the leadership, as they keep telling, is very much intact with the public sector stocks. They probably have a largest way to go still, because typically if you see in the bull market leadership, the stocks go up 10x, 20x after some point. So I would remain invested in good quality businesses.
Look at the index, for example, the PSE index. Clearly, we have been much more positive on power within the PSU theme than other areas, because we felt that the power generating areas are still more reasonably valued compared to the other areas. And we have been more positive on the upstream areas in the PSU theme, because these were the two themes where the price to earnings was much more reasonable than many of the other PSUs.
That's the word coming in from the experts, but let's also look at some more news and updates. As pollution levels improve in Delhi, GRAP 3 measures have been revoked in the national capital after 10 days. The other measures lifted under stage 3 of GRAP included a prevailing ban on private construction work and ban on mining as well as stone crushers. Ban on BS3 petrol as well as BS4 diesel vehicles was also lifted.
And the 2024 Lok Sabha elections are merely a few months away, but cracks are widening in the grand opposition alliance, the India bloc. The Congress party leadership is under scrutiny from all sides. The BJP, meanwhile, have been quick in ridicule the opposition for their warring stances, as well as and claimed the alliance has no vision or goal, and everyone will be fighting alone.
And the IMD has also predicted cold wave conditions in central and some parts of the northwest region this month, and there may be dense fog days over parts of northwest as well as East India over the next 3 years.
And the update coming in on Manipur violence, at least 3 killed and 5 others injured in fresh violence in Manipur after gunmen opened fire on locals. Curfew reimposed in 5 districts. CM condemns violence, appeals to the people to maintain peace.
Well, with this, it's curtains down on this edition of Market Cafe on ET Now. Thank you so much for tuning in. From me, Shriyanti Singh, as well as the team that put this show together, and Vinny as well.